Hey, if you're looking to start and grow a multifamily portfolio, this is a conversation you don't want to miss. I sit down with Yosef Lee, who is someone I've had a chance to get to know over the years. And we actually had a chance encounter back in December of 2019. And he credits me for giving us some advice that allowed him to start his own thought leadership platform with the meetup. Now, Yosef is a litigation attorney who has transitioned into being a multifamily investor, and he has since done 17 syndication deals and 5 joint ventures. He's going to share how he got started and how he was able to grow and scale his portfolio. So if you want to do the same, make sure you check out our conversation right here on Multifamily Insights. Yosef Lee is a multifamily real estate investor who embarked on a life-changing journey from the world of law to creating passive income streams. Now, Yosef's dedication to building a legacy for his children led him to explore the world of real estate investing, and he hasn't looked back since. Let's welcome to the show, Yosef Lee.
Hey, John, thank you for bringing me here. I'm
Yeah,
excited to
man.
talk about our journey.
Likewise, man. Likewise. Great to have you on. I went over your bio at a very, very high level. Why don't you take 2 minutes and fill in some of those gaps?
Sure. Like introduced myself, I'm an litigation attorney in New York City by trade, licensed New York, New Jersey, and Florida. Been as an attorney, been doing a litigation for over a decade. Around 2019 was a pivotal moment. That's when I started thinking about, okay, is this something that I want to do for the rest of my life, right? As my kids were growing up, I have 2 daughters. They're both teens now, and they wanted more attention, and I wanted to spend more time with them. But as you know, as a W-2 attorney, it was just constant trading of my time for money, right? Which I had no complaints. I loved my job. I loved litigation, but it was just I felt like I had no control over my where and with whom and how, right? So I started doing more research and reading books and watching YouTube just to see what options out there. And that's around when I stumbled upon the book Robert Kiyosaki Reach the Poor Day, and which just turned my mindset upside down. It was just an aha moment. And that's when I started thinking like, okay, I should transform myself from being a W-2 or sort of self-employed to business owners and investors. And I looked into what options I have. I did a little bit of research, and stocks were not at the time, nothing really thrilled me. But I stumbled upon the asset class multifamily by an accident. I accidentally went to biggerpockets.com, just constantly Googling. And then I started reading all this posting about multifamily, and everything makes sense. Like, oh, this asset class, even if I was not an investor myself at that time, but just by reading what a multifamily is, the scalability and not being a landlord, uh, like a small family house landlord, but being in more of a asset manager, passive income, and all these ideas kind of clicked me, and that's when I did more of self study on it. And from that point on, I joined multifamily investors mastermind groups. And then I started partnering with people, syndication, JVs, and fast forward, I became a GP of 17 plus, about 17 syndications and about 5 plus JVs, and started doing some business acquisition as well. And, and I'm evolving myself as well as to where I'm going to, and having a lot of fun throughout this journey. And it's almost been 6 years, and maybe I may get to have a chance to talk about. But you and I had some kind of special connection too, which you might have forgotten already. But it's in my memory clearly. So maybe later on I want to talk about that as well. But
Yeah,
yes, you're right.
I appreciate. We'll definitely touch on that. I'm curious to hear what you have to say there. Definitely touch on that. I heard you say something that is definitely near and dear to me, and I think many of our listeners, right? Like, I don't know anyone who woke up and just decided they wanted to be a landlord. Like most of us who get into real estate, it's not because we have this passion to be a landlord and collect rent, right? It's the thing that it allows us to do. And what you talked about was you're litigation attorney, you're doing well financially, but you don't have control over your time. You got two young daughters. You feel like you can't really control where you're at when you need to be there. And that's something that sparked you to take a look at other options that ultimately got you looking into real estate by accident, right? Landing on bigger pockets and starting learning more about what other folks were doing in the multifamily space. And ultimately,
Mhm.
that led you to start investing. You mentioned you've done 17 syndication deals, five JVs, building up your portfolio. And the thing that resonates is the why. It's
Mhm.
trying to get more control over your time. And I think sometimes people think about real estate about just getting rich or just making money. And certainly, that's an underlying component of it. But most of us are trying to solve a problem. And we know time is something we do not get back. Your kids are only
Right.
kids for so long. Mine are 11 and 9 now. And when they were really young, is when kind of I had to put my foot to the gas pedal, say, you know what, I got to figure something out because I'm going to miss out on a lot if I don't. And I remember I distinctly missed my son's birthday. I had to travel for. I was an advertiser. I do a TV shoot, and I'm
Mm.
having to go out for the shoot. My boss was the CEO of the company. His son and my son share the same birthday, so
Wow.
it would have been odd for me to tell him I can't go on this shoot because it's my son's birthday. Can you go?
Mhm.
And this your son's birthday. So it just happened to be like one of those really kind of weird situations. We were at a point really lean in the company where we didn't have a lot of people with experience. So,
Mhm.
but I just remember being on set, man, being miserable, and it took me forever to figure out why I was so miserable. Because usually I was always pretty well mannered and had good mind control and things like that. But dude, I was just miserable that whole day, and it wasn't until I reflected maybe a few days later that I realized I had two of my core beliefs of who I am as a human, as
Mhm.
a man, that were
Mhm.
in
Right.
direct conflict, right? Being a hard worker, a reliable employee, somebody the team could depend on, but
Right.
also being a present father who cared about his family and was there for them. And like
Right.
two fundamental beliefs of who I am and what I value, they were in direct conflict. And I think I felt that I chose the wrong value. And
Mhm.
values aren't values until they cost you money. And in that moment, when I made that choice, because again, you can always say no, there's consequences, right? I could have got fired or there's other things, but I could always say no.
Right.
And
Right.
I think that was the thing that really pushed me to say, you know what, you got to be able to have control. You have to be in a position where you can take that hard stance if you absolutely need to. And that really propelled kind of my journey into multifamily investing. For you, did you have a similar breakthrough or was it just simply that, I feel like I should do something different?
Well, I mean, 100% I agree with you. I also had that fundamental clash between the values that I have as an employee. You gotta lock yourself in from 9 to 6, and as a father, you want to be as much as with them. But my time as an attorney in the beginning years was not 9 to 6. It was more of like an eight to sometimes 8 to 7. I'll bring work home, and during Saturdays I'll go, and sometimes Sundays I'll bring work. Even when I'm sure you experience this too. Even when we go to the vacation,
Oh,
I
right.
bring work and I put them into the pool. And near the pool, I start working on the
You got your
computers,
laptop.
and I
Yeah, yeah.
always get to say, yeah, they always. My wife was like, "Hey, why do you have to do work here?"
Yeah.
I went through all that. But at the time, I was younger. I was eagering to build up my career and all that. So I mean, that kind of clash, yes, I experienced. But in the beginning years of my career, I probably did not assess. Uh, the right way as to what values I should pursue more. And but as I became more seasoned as to my career, now I could, spend 2 hours as opposed to 5 hours to draft some documents and going to court. Everything is coming more easier. Then I all of a sudden I started thinking like, hold on, okay, now my career wise, I'm more stable, but okay, what about my relationship to my kids? I love to stay with them, play with them, but at the same time, I have this career. I think all this as a uh, so for example, let me put it this way: if you are if you have a job or if you're skilled at something, if you're business owners, if you just keep thinking and thinking to evolve out of your current position, you will end up, I think, seeing some lights, right? Or some aha moments. I think that's what happened to me too. Just constant thinking about what options and what values and just doing all that thought process. Well, that led me to just answer some of my questions as to, okay, is this the thing that I want to do for the rest of my life? And then the answer and conclusion was maybe not. You could still work hard at the same time. You could still be there for your kids. It's just a matter of um, controlling, right? It's a freedom, time, and place and occurrence. We call it freedom of TPO. That's an expression on the police report in New York. TPO, time, place, and occurrence. So I use that as a freedom of TPO. It's the fundamental value that I looked for as I was trying to make this transition.
I love it, man. That freedom TPO, time, place, and occurrence. And to your point, and there's not a wrong, there's not a right or wrong. I think, ultimately, if an individual wants to prioritize work and earning money, like, yes, like there's a lot of benefits to that, So
Hmm.
it's no judgment. I know for me, it really stemmed back to like, childhood and not to go, deep into the psychological component of it, right? But like, what I saw kind of growing up, the importance of money and time. But then even when I started my career, I remember being an intern and sitting down with some of the senior folks at the agency that I was interning at. And you start talking to them about, work-life balance, which doesn't exist. But
Hmm.
you
Yeah.
start talking
Yeah.
to them, and
No
like
way.
I remember the woman she was probably like the number three in the company. I mean, she didn't remember how old her kids were, you know what I mean? Like, we were asking basic questions about like, "Oh, well, how do you manage it? How do you balance this?" And she's like, "Oh, well, I've got a nanny, and I've got this, and well, how old are your kids?" And she paused and had to sit there and think, and I'm like, "Oh, like, is that the
Or
trade-off
you have to
to get
think.
this to get to this level in a company?" And then we asked her, "Well, what does your day look like? What do you start?" She's like, "I'll start my day at 4 a.m." And I was like, yeah, I don't think I wanna wake up at 4 AM to start work. Like,
Hmm.
now that I'm older, I wake up pretty early to start my day, but I start with me, right? I start with,
Right.
what I wanna do, getting a workout, make sure the kids are ready, like, whatever. But they were starting their day to start work, you know what I mean? Looking at reports from the night before, and I'm like, "That's crazy." So,
Hmm.
it's up to the individual, right? But I do think it's important if
100%.
you are looking to take control of your financial future, real estate certainly serves as a great way to do that. Talk to me about that first deal, right? So you've kinda went through, you're doing your research, you come across Robert Kiyosaki's book, you're getting on Bigger Pockets. What does the first deal look like, and what gave you the confidence to pull the trigger?
Sure. So the first deal. Okay, so 2019, I started, like, I was in the self education and all that, and early 2020, right after pandemic shutdown came, I started my mastermind. I joined two mastermind. One was Jake and Gino, and the other one was MIT Mastermind by Marco Bufaro and Hadaro Kiwi. So by doing this mastermind concurrently, I met so many people. I was doing all these networking calls through the Zooms, and I stopped counting after 200 in 2020 alone. Literally one-on-one Zoom calls like this. I was constantly nonstop reaching out to people, just getting on a call, uh, at least three to five a week, and to 10 constantly and consistently. And that's how I met all my partners, right? So my first deal happened in December 2020. That was a deal that came to us through one of my partners. It was a boots on the ground partner in Kansas City, so Lawrence, Kansas. Right, his friend knew the owner, and the owner was trying to sell it. So my partner's friend brought that deal to us and said, "Hey, are you guys interested in looking at this deal?" So we said yes. We underwrote it. We really liked the deal, so we spoke to the owner. The owner really liked us, and it just deal happened like that. It was an off market. Never put it on the market, and it was all metrics. We learned on under market value, under market rent, deferred maintenance, upside, meat on the bone, you know. And it was a 44 unit apartment. I think the vintage was like 1960 something. It was older. It was like a C plus type of property in Lawrence, Kansas. And it the striking price at the time was 1.85 or 1.825. And we got in the contract, and then we started doing the due diligence, and we found that the HVAC and plumbings are really old. So we spoke to the owner. We told the owner to, fix it before the closing. And then the owner was like, you know what? Why don't I give you the credit and you fix it after closing? And then he was like, how much you want? And like at the time, our first deal, didn't know much. My partner said, oh, $100,000, like without knowing whether he would agree or not. And
Wow.
then, and then he was like, okay. So we got $100,000 credit. So in
Wow.
the end, the deal became 1.725. And then um, I believe think we had a exact mirror image property right next to our property, 44 unit. We believe the same developer had 88 units, and he just cut it in half and sold it to two different owners. But that property was more it was nicer, cleaner, and they were charging higher rent. It was about $150 uh,
Mm.
above our rent. So in average, we had like $150 lower. So we started as soon as we took it over, we started testing the market, right? So there were like a couple of tenants that we needed to renew. Um, and we said, oh, okay, we would charge $50 more. We tried $100 more, but there was not much pushback. So we knew like, okay, so literally we had a good upside, right? And at the time, the property, more than 50% was month to month. So we had to constantly push for longer lease, giving them some credits or concessions and whatnot. And about a year and a half later, we were able to bring the average rent from $500 per month to close to I think 700. So at least 150 to $200 more of average rent we were able to achieve, right? And this is the concept we learned through Mastermind, right? You by pushing your NOI without really touching anything, your value goes up. So just for the tips, let's do the math. So ours is $500. Let's just apply $150 more times 44 unit as 6,600 a year, and then times 12 uh, for 12 months is 79,200. And we consider the area to be 7 or 8 cap. Let's just apply 7 cap divided by 0.07 is $1.1 million value was just added by pushing only $150 average rent. And that's the magic, right? That's the magic that we love about multifamily. And what do we do? Once we have that much of equity built up, now we applied for refinance. Again, another concept we learned, cash out refi, right? And that was still good timing. It was 2022, early part of 2022, right before the interest rate hike, right? So we were able to get good interest rate. I think we got, it's on the tip of my tongue, maybe four, if not three something or four. And we did 100% refi, cash out refi.
Mm.
So we deployed all that capital back. We had 6 people. It was a joint venture. And then we had some more left. We distributed as a bonus and still kept it for infinite return because it's still cash flowing, right? For the next couple more years. But, some 1 year we had um, the pipe broke down and we had sewage issues. So we started spending a lot more capex money. So we decided to sell, uh, and we put it in the market. And last year we sold it. And when we were trying to sell it, we applied, I think 7 or 8% cap rate, and then bank came and they said, "Oh, this is more like 6 to 7."
Oh.
So, the bank applied like close to 6, below 6 So it came out to be more equity than we thought. But we ended up selling it for $3.15 million. So overall, after cash out refi, um, there's a twice more equity multiple. So including cash out, full refis, it was a 3x deal.
I love it, man. There's a lot to break down there. I'm gonna start with the deal, then I want to rewind the clock and start where you started, really. Before the deal, you bought this thing, got under contract at 1.8 million. Went through your due diligence, found out the HVAC and plumbing needed to be replaced. You asked for a credit for $100,000. Owner agrees, gives you the credit. You go in, you start pushing rents. Not really a big, renovation strategy, just more so pushing the rents in place. You're able to get $150 in rents. After a year and a half of this, you're able to increase the value of the property by $1.1 million. So that $150 rent increase created $1.1 million in value. And this is one of the concepts that sounds great in theory, looks good on paper, gets people excited, but you really do need to hear stories like yours that this is real. This is not just some crap somebody threw into a book. It's not just a concept. Like this is how commercial real estate works. If you can
Mhm.
create
Mhm.
value and drive the NOI, the net operating income, you increase the value of the property. In your case, you got a double win because the cap rate compressed as well, right? You thought it was like an eight
Right.
cap, 7 or 8 cap. And then the bank was like, no, it's close to a 6 or 7 cap. So you're actually able to sell it for more. You end up selling this thing a few years later for 3.15 million. Again, you bought it for 1.7, sold it for 3.15. So you almost doubled what you sold it for. And this is after the cash out refi. So you had already taken out your
Yes.
money out, put in your pocket. So you guys did extremely well on this deal, right? So kudos to you. Lots of great insights on how to execute and how to deliver. I want to go back though where you started because I think there's a lot of value for listeners. You mentioned that you joined these two masterminds and you did over 200 Zoom calls, right? You were doing 3 to 5 Zoom calls a week. Why? Why were you doing all these calls? Why did you join two masterminds? Like that feels I don't want to say like overkill, but that feels aggressive and a lot of action and a lot of steps. Why do you feel the need to do that?
Okay, let me start with why I joined a mastermind from the beginning. So I
Two
started going bigger
masterminds.
pockets. Yeah, yes, yes, yes. So I started going to biggerpockets.com, right? 2019. It's like later part of 2019. Towards the end, we started talking about pandemics and all this, you know, um, like COVID, right? COVID thing going on. So you know, I started going to biggerpockets.com and started talking, chatting with people and reading the postings. And, I started studying about multifamily real estate. As I was doing it, I thought I sort of on a analysis paralysis stage. Like I was learning and learning and learning, but I was not really taking any actions. And with learning itself, to me, I felt like I was doing something, but it was really not a action. So I decided to do next level uh, thing. And to me, that was joining a mastermind because you know, I was reading a lot about all this masterminds and people talking about how they were helped and guidance and mentorships. So I thought, okay, why don't I leverage other people who have done what I want to do and who's already there where I want to be. And so I started talking to different people, and there were 80% of people who told me not to join and 20% of people who told me to join. And basically, 2 points if I extract from each group. 80% of people told me, look, what they're going to teach you, you can get it for free from YouTube or like $10 books. Why are you trying to pay 20,000, 30,000 just to learn something that you can learn by yourself for free? And why don't you just spend that money as a down payment and buy a single family and try that? I'm like, huh, this guy's has a point, right? And then I was talking to the other group, about 20 people, 20%. But they were like, hey, Yosef, you must join this group. You're going to meet a lot of amazing people who have done what you want to do, who can mentor you. You're going to meet amazing partners through that group, etc. So I'm like, oh, okay, yeah, this guy has a point too, because I believe it's not about how, but more about who first, right? And what, not what. So, okay. And then I started comparing, and I decided to join the mastermind because there's two reasons. One, I had already decided to do multifamily, and saving 20 grand would not do anything for down payment. And right, it's multi-million dollar deals. Like, what am I going to do with $20,000, right? That was one. And two, I see that all these multifamily deals that I want to do are being done by the people who are from this 20% of group, not by this 80%. So I'm like, oh, these are the people, they're doing the deals that I want to do. I'll just listen to them. And later, looking back, I realized even the language they're using are too different. You see how the first group are talking about as if it's a cost. You're gonna waste your money, all that. And second group is talking about the partnership and the relationship and the amazing people that I'm going to meet through joining this group. And that's the difference of mindset that you can kind of catch on from the get go, right? So I ended up joining. I first joined Jake and Gino, and the pandemic happened and the pandemic shut down and I had no work, right? Insurance companies were closed, courts were closed, my office was closed. So I feel really bad for those who lost their loved ones during the COVID, but COVID was a disguised blessing for me at the time. I was solely focused on learning about multifamily investing and not only consuming the online materials, but also started reaching out to people like in Jake and Gino. There were like probably at the time 800, 1,000 people that you could network with. There was a spreadsheet of people in nationwide. So I started just calling out, like reaching out because I knew that what mattered the most is the people that you're hanging out with. I believe even that time the five people that you're hanging out the most, you're the average of them. So I constantly reach out to people who can add value to me at the same time I could add value to them. Right. So that's why I just started reaching out at the time. First, probably a few months, I was not really good at networking because I was constantly just reaching out for the sake of reaching out, not really thinking like what to talk. It's just me like doing blind date, right? Hey John, nice to meet you. Like, what do you do? Like, what can I do for you? Right. Then you'd be like, hey, I don't even know you. Like, so I soon realized, okay, true networking is not about like, just reaching out. It's like knowing about myself and my values, knowing about who I am, knowing about what I can do and what kind of value to provide and market that to the other side so that they can know what kind of value they can also add to me and also they can also get out of me, right? And as I was doing more networking, I was becoming better at that. And 2 3 months later, I started realizing couple of even Jake and Gino was really big at the time, and I started noticing uh, you know, the active ones versus not so active ones. You get to see that, right? On the social media, because I was doing social media a lot. And those active ones were gathering somewhere. So I'm like, what is that group? What is that group? And I asked at the time, Mark Barber was my student advisor. I asked like, Mark, what is that group? I want to join that group. And Mark was like, oh, that's not part of Jake and Gino. So what is it? Oh, it's my MIH mastermind. Oh, can I join? It's like, no. I'm like, why not? It's like, oh, you just joined Jake and Gino. I can't let you join my mastermind. It's another paid group. I'm like, it's okay. I want to join. And he was like, a couple of times he refused. He spoke to Gino, and then he came back and said, you know what? Yeah, he said I could have you in my mastermind. So I joined. Mainly back to your question, why? because I saw two different values. Jake and Gino at the time to me was like a university, it's huge, full of people. You could reach out. They were like guiding you through like hands in hands and step by step how to underwrite deals. Like amount of materials are just enormous. And my actual mastermind was more like fraternity or sports club, where more like-minded, more active ones, more people that I could share more in an in-depth level were gathering. So I thought joining an MI's mastermind was also, to me at the time, was another level up, and because I saw a two different value, and I did both concurrently, and I did get both values, and I have no regret by joining this masterminds. I mean, a lot of times people ask me, why do you have to like join all that? Like you can learn all this free. It's not about it's not about the education, but it's about access to amazing partnerships, right?
Joseph, I, I love your story here, man, and I think there's a lot we can take away. First and foremost, you mentioned the information, right? Yes, you can get a good chunk of that information through books, podcasts, free content that exists. Certainly, you can learn cap rates and how to evaluate a deal and how to talk to broker. Like, there's a ton of information you can go to get and answer those questions. The reason you join a mastermind or hire a coach or get a mentor, it's really twofold. One is community, which you talked about extensively, right? Being around the right people, being involved and connected with other folks, potential partners, networking. That's a big part of it. But the second part of it, well, there's really three. The second part is kind of tied to community too. And that is really about the energy, and what I mean by that is being around like-minded individuals. It's it's energizing. It keeps their
Mhm,
focus. It's
mhm.
not necessarily competitive, but it's a driving factor. When you get to see what someone else is doing, it motivates you. It kind of keeps you going, right? And I think that's really important. The third thing I was going to say though is to have specific, intricate answers for unique situations. Because guess what?
Exactly.
YouTube is great when you're trying to analyze a deal, but guess what? When you get into that situation where you find that the HVAC and plumbing systems need to be replaced and you go to approach that seller, you could lose the deal with how you approach it, right? If you come with
Mhm,
a crazy number, if the tone's wrong, if like all of that matters. When I was starting out, I had a deal completely off market. I didn't know how to value the deal because it didn't come from a broker, right? So I didn't have any pricing guidance. It was a newer asset. I had no clue what the cap rate was. I made an offer and that guy said, go kick rocks and lose my number. And I was like, oh crap, I guess my offer was way too low. He told me delete everything and never call him again, right? Man, really would have wished I would have reached out to my mentor before I submitted that offer, right? So sometimes that happens, right? Maybe there was a tone or something I could have used to say,
mhm.
hey, instead of me throwing out that offer, maybe I could have found a way to pry something out of him first. But that is where you pay someone, right? You want to be involved because you want the nuance, which is where the rubber meets the road. And that's going to be the difference in doing the deal and not doing the deal. And when we talk about the actions, right, the 200 calls, you were taking the action. You wanted to be surrounded by the people playing the game at a high level. And that's critical, and whether it's paid from a paid mastermind or finding your tribe, the active investors who are going to show up and keep you motivated. That's so key, man. I know for me personally, when I was in Chicago starting out, I would go to meetups all over the city. They weren't even meetups really. There was like RIA events, right? But
Mhm.
I would go and I felt like none of those people were trying to do multifamily. They were all like buying rentals or flippers or wholesaling. And there'd be like one other multifamily person maybe in each group. And once I started to get around folks who were actually looking to be in multifamily, it energized me. I went every month. I met the same people. I watched them grow. I got to learn how they were growing. I got to see what they were doing. And that kind of led to this snowball effect, which led me down the path of getting a mentor, which led me down the path of, starting to create my own events, which led me down the path of building up a real estate syndication business. And I know you've done the same, right? I know you've hosted events. I know that you've been pretty active on Bigger Pockets and in this Facebook groups as well. Just talk about kind of the proximity component by being around this network of individuals looking to play the game at this level and the impact it's had on your investing success?
I think without I'll confidently say without these groups, I would have not been where I am now. It's because from New York City, I'm investing out of state. Initially, I wasn't thinking at all that way, right? I was looking in New York City only, and price wise, nothing was justifying. Like I was started looking into Jersey, and then Connecticut, and then I found some price match there. However, my second thought, okay, even if I buy something close, right, like Jersey and Connecticut, am I gonna go there every day? Am I gonna go there every day and check out how the property is doing? And am I gonna go there if I get a phone call from the tenants? And no, right? I'm gonna have to find somebody who's trustworthy that I have to just rely on, property managers or whoever that is, even if proximity is not that far, right? So at the time, I was like, okay, then I want to I go further and see if there's any other places where the money makes most sense. And then I was going further away and away, and then I landed, you know, Missouri and Kansas area first. What I'm trying to say is, how can I trust them? Like anybody there, I know no one there. Like that's where the mastermind came into play. Where at least these people are ones who paid and committed monetarily to become a real estate investor and to be in this community. Just by for the fact that I had a certain level of trust from the very beginning, and that's how I was able to do a partnership with them without seeing them. First deal is right around the pandemic era. I never traveled to see the property. I just watched a video from my uh, boots on the ground partner at the time, whom I never met in person before. And my KP and KP's friends, everybody, by then, I never met them in person. We were just having Zoom calls and text messagings, sending videos, signing documents online, and then sending, monies here and there all together. And like, how could you, without having that much trust, do that, right? And even that level of trust without this group, I would have not had, and I would have not been able to execute at all, right? So that was the start. Once that was done, second syndication, boom, in March of 2021, 68 units with the same partnership group and secondary partnership group together, and then I got picked up by my mentor Marco um, to be in another deal and another deal. Started raising some capital for my deal coach Chris Jackson Sharpline. Well, there's um, linkage, right? Came from and started from this mastermind, and it's still continuing that community, the partnership, and word of mouth referrals. So this is it. And as you said, the component of being in a community with like-minded people are so important because the journey itself, not many people understand. And as you said, and especially from where I am in New York, when it comes to real estate investing, all they think about is, oh, buying a single family duplex, sits on it for a couple of years, crazy appreciation, and you sell and make chunk of money. That's the way they think when it comes to real estate investing or flipping. Right? So when I was trying to tell my friends about this concept of multifamily and you could buy like 20, 50, 100 units, they're like, you sure this is not a scheme? Right? Because here it's more of an institutional level. If you want to do multifamily investing in the city, right? And that I was kind of lonely, right? But because this group, I was not. I was lonely with my friends because they won't understand what I'm doing. And I was like, you know what? I'm not gonna talk to you anymore. I'm gonna show you what I'm doing. Eventually, you will see what I'm doing. And after the first and second deal, people started, calling me. It's like my friend was like, "Hey, so what is this, Yosef? What is this apartment thing? And can you tell me more about it?" Right.
Yeah.
So again, this is not only partnerships, but also friends, and you grow that relationship as a friends and partnership together. And
So
now, yeah,
sorry, I was just saying, like, I think that's so important because it can be very lonely, especially starting out. And I know it sounds like you and I have similar experiences with, like, when you're talking to your friends and your family, like, they want to protect you, right? So they're gonna be like, "Hey, man, I think you should. Sounds really scammy. Are you sure this is real? Like, I don't know, man." And I know there were moments where we had to look ourselves in the mirror, and be like, "Yo, am I crazy for thinking I can do this? Is this? Do people really do this?" But that's why those events were so important for me starting out, man, and being around the right community where people are playing the game at that level. And I think it's so critical. I know we're up on time, but I do want to ask you a couple more questions. One, you alluded to kind of one of our initial interactions. Will you share a little bit more on that?
yes. So right after I read Joe Fella's book, what was it, the Red Book, right?
Yeah, real
About
estate. I
what?
got it right here. It's the best ever apartment
Yeah,
syndication. Yeah.
best ever syndication book,
Yeah.
right? And a part of the book was about having your own thought leadership platform. So I was thinking about hosting my own meetups, like the virtual meetups with my friend Nico, and whom you have that cutting
Nico
board from.
Nico made this board right here. Shout out
Yes, yes.
Nico.
He and I started a virtual meetup in May 2020 without having any deal under our belt yet. It was started like literally three, I think three people or four. We had a guest, Nico and me, and one person virtually. But that's how we started. And few months later, believe it or not, I had Rodcliffe as a guest speaker with 80 people coming,
Nice.
and it was fun. But uh, right before that, in 2019, as I was still trying to figure out where to go, I posted online on biggerpockets.com like, oh, I want to have my own thought leadership platform, but I'm afraid to call myself real estate investor when I don't have any deals under my belt yet. Like, what do I do? Should I just get quiet or and there were a couple of comments, and one was really resonating with me, and that was from you. And I have the screenshot and it's still on my phone, and it's from December 2nd, 2019, from Chicago, Illinois. And I'll share this screenshot with you later. But basically, it's like if I read a little, you don't have to wait, but be honest with your audience on where you are with your journey. Don't pretend to be more experienced than you are, and people will appreciate watching you start out. This kind of hit me like, you know what? Okay, I'm not gonna be shameful about me not owning any investment property because everybody starts somewhere, right? And this is where I am now, so nothing to hide. And I started reaching out, and I even became a podcast guest without having any deal on this. I just reached out. I told, like, asked them, like, can I be on your podcast? But I don't have any deal. And they were like, it was a two asset class or something. But it's like, yeah, sure. Let's talk about why you got interested in multifamily. So that's how I start. That's what got me some courage, right?
I love it,
To
man.
kick off my
I love it,
starting. So
man.
I appreciate you.
Well, thank you, man, and I appreciate it, and I hopefully that resonates with someone listening right now too, because you know I think many of us have that imposter syndrome, right? Where you don't want to come across as someone else. And, in this space, there's so many quote unquote gurus that, it's very easy to get put into a box and maybe that's not your intention. So I've always tried to be really careful of how we present ourselves and come across and things like that. But the truth is, there are people who are looking for you to share your story in your journey, your story, it's unique to you. And if you are sharing your perspective based on your experience, that is always authentic. And no one can ever take that away from you. And more people need to be willing to share their story because your audience will connect with it. The folks who know Yosef, your friends, your family, like those are the ones who want to see you. And those are the ones that you can impact the most, right? It's not some random guy that you've never met in Seattle. It's the person who has known you for years and is watching you, try to make this change for all the reasons we talked about
Hmm.
earlier, right?
Hmm.
Trying to have more control over their life. There's someone else
Right.
close to you who is also trying to get more control of their life. And when they see how committed you are to making this change, to becoming a real estate investor, it's encouraging. And I will tell you, as someone a little further along in my journey than you, I think the biggest testament to myself on this journey and building in public, right? Which is now like a popular, cool thing. Like everybody wasn't ranting about building in public 7 years ago, right? But right
Right. Right.
now, it's cool to be like day one of me trying to blah blah blah. Like that wasn't a thing 7 years ago. But I will tell you, I think one of the biggest testaments or the biggest pat on the back for me is watching a couple of my closest friends become investors, and investing in, multifamily and Airbnbs and different asset classes. And they will credit it to working with me. They've been LPs on my deals and they branched out to do their own stuff.
There you
Families
go.
who have
There you
invested with
go.
me. And I say that because that's the impact. If
Hmm.
you're looking at being a syndicator, raising capital for deals, yes, you need money to do your deals. But I would urge you to think about the people you can help. And if
Yeah.
you are
100%.
helping the people in your circle, I think there's a different level of dedication and commitment you take, right? Because you're not going to try to mess up when you got, people you love in these deals. Uh,
Right.
there's a different level of dedication and commitment. There's also a different level of purpose that comes from it. When you know you could help people close to you and be a solution, be the answer to a problem that they're facing. Again a driving force, right? It's a reason to analyze one more deal or to take one more phone call or to do that next thing that maybe someone else would have quit and just said, "Oh, it's okay, whatever. I got a good job. I make enough money." And it's a different level of purpose, and everyone's not willing to do it. It's not for everybody. But if you are going to raise capital, I would urge you to take it seriously and take it with a sense of discipline and purpose. And I know you've been able to do that. So I know we've gone over on time, man, but I enjoyed our conversation today, man. I think it's very, very
Same here. I'm sorry I talked too
valuable. And
much.
no, you're great, man. I think this is great for the audience as well. Yosef, what's the best way for our listeners to get in touch with you?
So I try to be active on social media. All my social media handle is one and same. Yosef Your Brosef. So YOURBROSEF. It's my social media handle. I have YosefHLee.com as a website as well. I'm part of MIH Mastermind. Uh, if you're interested in joining our group, reach out to me. It's led by Marco Hadar and another friend of mentor of mine, Robert Musso as well. Uh, and your friend Jaideep also a
Yeah.
part of our group
Yeah.
too. So they're amazing human beings, and we're just a group of just nice, amazing people, right? Just get to know, hang out with, grow friendship together with. It'll be
I
fun.
love it, man. I love it. We'll put a link to that in the show notes. And right now, we're going to transition and go to our round of insights. When you think you found a great deal, asking the right questions could be the difference in finding a stud or a dud. Listen, we've put together a new guide to help you out. It's called 7 Questions You Must Ask Before Investing in Apartments. Now, in this guide, you're going to learn how to uncover red flags, quickly identify underwriting risk, vet sponsors and team members, and confirm key assumptions. Now, this is a guide that's going to help you be a better investor, whether you're an active investor or you're a passive investor looking to partner with other operators. Asking better questions is the key to identifying great opportunities. So download this free guide. Go to our website, casmoncapital.com/7 questions. That's the number 7 questions. And you can access this free guide today. To make it easy on you, though, we've put a link in our show notes. So you go to the show notes, you can click that link and access the guide right now. This guide's going to help you make better investment choices, asking the right questions to build your portfolio. So be sure to download it today. All right, Yosef, give me a failure or an apparent failure that sets you up for later success.
I'll say one of the very first deals that we jumped too quick was the lightning moment, right? We had a seller who asked us to draft a closing documents as if he's gonna give the deal to us. We hired our attorney and then drafted the closing document, PSA. As soon as he got it, it brought it to another buyer, raised the price, and ended up closing there.
Oh man.
The lesson learned is, you know what? Just even if it's too good to be true, just make sure, review the documents, get to know the person more, the seller, know the story. As just don't look at the deals, and if it's a good deal, don't just jump. All right, so that was the lesson I learned.
I appreciate you sharing that.
Yes.
Give us a digital or mobile resource you recommend for our listeners.
Digital moral resources. I use fairly simple, the things that I ask on my phone. It's like notes and reminders. I think it's the tools are similar. I mean, there's a preference. The tools are similar. It's just you having in your mind clear structure as to how you want your system to run on certain structure. I use reminders, and then email. You can turn my email to reminders, and then being put on my to-do list also can be shared on my calendar. It's like an ecosystem. Every morning I get to prioritize things and put the 3 things that the most important that I have to get done by today. So yeah, again, tools, simple iPhone notes and emails and reminders. Maybe I use Asana as an tool to kind of organize ideas and as used as a CRM. But I think heavily I rely upon notes and calendar app and reminders.
Give me the book you've recommended or gifted the most in the last year.
After Reach Them For That, I didn't really read much books. I got some summaries out of here and there. I really loved the concept of one thing and the concept of think and grow rich, right? That you have to have like a constant burning desire and believe in yourself, and like a law of attractions. But I think law of attraction is only the half the story unless you really take any actions, right? And again, I differentiate actions from learning. Learning is not action, taking an action. Just because you move your body and read books, it's not. There has to be a intentional execution of moving things to the next stage, right? By, as you said, by calling the brokers, dialing the phone, things like that.
I love it. Give me a daily habit that helps you stay focused on your goals.
Morning prioritization. Every morning, I try to prioritize my to-do list and reminders. And even if I have 50 reminders a day, right? Out of the 50, I know I'm not going to be able to get all done. So I just try to pick all, like the most important 3 out of all, and make sure I get those 3 done. And tell myself, don't feel guilty about not being able to get all done.
All right. Give me your number 1 insight for getting started in multifamily.
ENA, education, networking, and action. You gotta educate yourself about multifamily. At least you gotta know the basic lingos, right? Terms and what it means to calculate NOI or cash and cash returns. Otherwise, you're never gonna understand. Even if you have mentors around you, you have to do your own homework, the basic ones. And then and then start talking to the mentors or people who are already ahead of you in the game so that you can learn and try to surround yourself with them, like-minded, motivated, right? And lastly, now it's your turn to take actions. Like I said, you just don't learn. You need to apply what you learned and try to bring the result. Whether it's failure or not, I think in the beginning doesn't matter, because even failing something means that you took an action. Because if you don't take actions, nothing's gonna happen. So,
Love it. All right, last question, man. You are in Queens, New York. Give us your favorite place to grab a bite to eat.
okay, so there's a cafe bakery on Union Street in Flushing called Hainan Bakery on Union Street. And me and a partner of mine, we bought that cafe 2 years ago. It's
Nice.
5 minutes walk from my current office, my law firm. So that's the place to go.
I love it, man. We'll definitely put a link to that in the show notes and shout that out, man. And we'll have to pop in there next time we're in New York, man. Love it. Love it.
Great.
Yosef, love our conversation, man. I just appreciate hearing about your journey, man. Really focusing on getting more control over your time to spend with your two daughters, leading you into, some sort of investing that ultimately got you down the path of learning about real estate, doubling on bigger pockets. I'm happy to play a little small role in your journey and giving you some guidance there on starting to network more and get your word out there, building your thought leadership platform. But from there, going out, finding that first deal, getting involved in those groups, being able to grow and scale 17 syndication deals, 5 JVs, being able to grow your portfolio, and just talking about educating yourself, networking, and taking action. Really, really great insights for all of our listeners. And I appreciate the transparency and vulnerability you shared along this path on your journey, building out your portfolio and getting started. Again, we'll put a link to your contact information in the show notes. But I want to thank you again for being a great guest and coming on Multifamily Insights. We look forward to staying in touch with you, and I hope you have a great day.